Hello and welcome to Business Incorporated. We're coming to you live from Channels Television in Lagos. I am Bolaji Akinwale. Today on the program, emerging markets adjust to reality of weak economic growth. A review of the IMF Extended Credit Facility Program for Ghana. Plus, updates from the commodities markets. Okay, let's begin by taking a look at the markets in Europe, which opened on a bright side today, bringing in at the moment DWTV financial correspondent Ulrich Bath. It joins me from the Frankfurt Stock Exchange. Good afternoon, Ulrich. Thank you for your time. Now, we have seen oil prices rise in the past couple of days. However, on Thursday, it dropped. How is this affecting oil stocks and the broader markets?
Well, the steep rise in oil prices over the past few days, I think that's seeing some profit taking here. The oil stocks are either treading water or just going down a tad. Here in Europe, BP is down, Shell is up. Over in the States, and Exxon and Chevron are also trading up, but just by a little margin. Trading hasn't begun yet on Wall Street, but these shares are also traded right here in Frankfurt, for example, so we can give you that trend. I don't think people in the market are making too much of this, let's say, reaction settling down after the oil prices have risen so steeply. It's a normal reaction after several days of really oil prices soaring. And also the shares, Shell, BP, Chevron, Total, you name it, they also soared along with the oil price in the past few days. The market today taking that development in stride, even though the markets are really nothing to write home about today as a total trend.
Now, in the meantime, European bank shares are hitting the roof based on the overweight status placed on Citigroup. Tell us more about this.
Yeah, Citigroup says it's about time to buy back into European banking shares. Citigroup agrees, yes, the interest rate environment is very challenging. It's very hard on margins, and that continues to be the case. But they see loan business improving, and so they see the opportunities for banks and for the banking shares also improving. Interestingly enough, Deutsche Bank share was also up quite a bit at the beginning of the day on news that German government officials were going to talk or are talking to U.S. government officials on lightening the load in the case of a $14 billion payment in connection with dubious subprime mortgage asset-backed securities.
Now, Ulrich, as we move closer to the end of the week, all eyes will be on the U.S. non-farm payroll that is expected out tomorrow. Now, some say this may be a pointer to the U.S. Fed's decision on interest rates. How is the market gearing up for the reports?
I think that's a good explanation for the nervousness that's in the market. People are testing the waters. For example, here in Germany, the DAX, the barometer for the most important shares in Germany, was clearly up at the beginning of the trading, but it's dwindled downwards since, slightly in the negative. The labor market data is going to be possibly one of the most important bits of information for the market this week, and the market will surely react tomorrow. How? I don't think anyone can predict ahead of time. The forecast from leading economists is that the job market in the U.S. add 175,000 jobs for the month. If the number varies in any significant way from that, there will be heavy reaction here, and people here are looking forward to it, but they're also fearing it a little.
Ulrich Bath, the WTV financial correspondent, thank you so much for your time. Moving on now, the global financial market, taking a look at how the markets are doing at this time. The International Monetary Fund has stated that emerging markets have made adjustments in the wake of weak economic growth. According to the Deputy Director, Monetary and Capital Markets Department, Mr. Peter Datiles, low interest rates and the global search for yield present a unique opportunity for overly indebted firms to restructure the balance sheet. Corporate leverage in many emerging markets have peaked, according to the IMF. Now, in the wake of weaker commodity prices, firms have slashed investments, reducing the need for borrowing. Mr. Datus, who was speaking on the sideline of the World Bank IMF meeting, noted that commodities prices and reduced global trade, substantial debt reduction will take a long time. High debt levels leave emerging markets sensitive to downside risks and the reversal of capital flows. Emerging markets are therefore advised to proactively address corporate vulnerabilities, including through swift recognition of non-performing loans and strengthening of insolvency frameworks.